One.
S&P downgrades the banks. Dick's Sporting Goods getting destroyed. What does it mean? Absolutely nothing, because this is the Nvidia market. Not only is it going to power AI, it's powering this entire market. We're going to talk about that today. A lot of retail earnings. David Trainer at 8:35 to talk about all these earnings expectations. It's a Tuesday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We are starting out solidly in the green, trading at the highs of the session, up 25 handles, 44.3750. Dollar futures still above 103, up a couple pennies at 103.20. Bonds up about a half a point at 118.10. Crude under 80, down 48 cents at 79.64. Gold catching a bid, up $8, 19.31. Silver responding, up 14 cents at 23.48. And you know who's not participating in the rally? Bitcoin. Bitcoin, the futures are down $25 at 26,040. So Triple D, in our 125 years of combined experience in the market,
Yes.
have you ever seen such a focus on one stock in their earnings report?
Actually, I don't think so. That's a good point. I've seen moves like this before, but I don't think I've ever seen the focus that media and retail and Twitter is giving to one stock. I mean, it is talked about continuously here. This may have been the most predictable run-up ahead of a report that we have ever seen, and it has been an incredible run-up ahead of the report. On Friday morning, we were 416 on this stock on Nvidia, and now it's 477, up 60 straight points ahead of the report. We still have a full 2 trading sessions before this thing goes. Like, it's not out of the realm of possibility. This is going to take $500 before the report. And if you thought the expectations were high before, that bar has raised even incredibly more. But wow, like the move here and the commentary, just every single analyst popping on CNBC or on Twitter or wherever is just saying this is the report. This is the report, and they're right. This is the report. It's the last big mega cap to report. It is what everybody wants to see. It's the AI driver for the market. They got to blow it away. There's no doubt now they have to blow it away if they're going to continue to go higher from here. But the money is being made, being long ahead of this report. I think it could see $500 before it reports.
I mean, it's momentum, and we could say what we want to say about analysts, right? We talked, very tongue in cheek. I think it was on Friday. I talked about Tesla, right, and how that Adam Jonas came out with whatever he came out with, and it was after just like a major move down, and it couldn't make me more bullish. So you can use it as a contrarian, but you can't be a contrarian in a stock like Nvidia with the analysts, because they have come on several days in a row. I'm going to give you one number. That's it. It hasn't hit it yet. All-time high, 480.88. That one number from Nvidia. And let's talk about, there's some negatives going on in the market here, and it doesn't care. It absolutely does not care about S&P downgraded the banks or this Dick's Sporting Goods report. Just who cares?
Yeah, the market doesn't care about Dick's. We know that. If it'd be a different story if Nvidia was down. Let's bring in Money Mitch here. He can talk to us about the Dick's Sporting Goods report here because this is an epic disaster. DKS trading down 18%. It was trading up ahead of the report last night, and I was looking, I was like, I don't know. I could show it was up $2 ahead of the report. I was like, do I take that? I was like, I don't know. It's not enough edge. I didn't think. And you never know. Sometimes these after hours traders seem to know more than they should. But this was not the case on DKS because they pulled the rug and they have not even stopped pulling it here yet. Money Mitch, how'd they do?
Let's get to it. Q2 adjusted EPS is $2.82, missing the $3.81 estimate. Sales of $3.22 billion, missed the $3.23 billion estimate. Dick's Sporting Goods comparable sales increased 1.8% versus a negative 5.1% year over year. They reaffirmed 23 comparable sales outlook in the range of flat to positive 2%. But then stated in the earnings call that our Q2 profitability was short of our expectations due to large part to the impact of elevated inventory shrink and increasing serious issues that's impacting many retailers. This came from the CEO, Lauren Hobart.
Just a mess. I mean, the big miss on earnings, the miss on revenue. And then you look at the lowered guidance, 1150 to 1250 from analyst estimates, way up at 1350. So just a mess across the board, a messy report. And is this the official end of COVID? I mean, think about, we've talked about the other stock.
Going out.
There's a few of these other retailers that we know. Everybody's going to go inside. We're just going to do outdoor sports. And Dick's benefited tremendously from that. The incredible run up in 2020 from 2021 when it went from $20 to $140 a share. I think this quarter officially marks the end of that. We're not going indoors. We're just doing everything outside trade. Well, the outside trade appears to be over.
Not the bad news is it's down 27.5 bucks. That's almost 19% at 119.30. That's the bad news. The good news is it hasn't made a low for the year yet, which could be imminent the way it's trading right now. So let's look at it this way. The pre-market low, where we just spiked to, was 116.17. Wow. A little bit of an overshoot for me. Yearly low, 118.55. So I mean, I can't sell it down here. And so it looks like someone's nibbling at 119.50. So let's look at ASO. That's getting the beats off this report too, right? Academy Sports and Outdoors. People nervous about that. And
Yeah.
who would fall out? Who would you put in this category also? Diggs, ASO.
Big BGFV, you got Big Five Sporting Goods. Nike is getting hit. It's probably the biggest name getting hit out. This is Nike.
Really? Okay.
And you got like obviously widely traded, and Nike just quietly, not anybody talking about Nike, but this stock just quietly hitting a new 2023 low here right now. So you think about how strong 2023 has been. This has not been the stock, and really retail has had a pretty good rebound. Some of these stocks like Kohl's, some of these stocks like, well, Macy's hasn't really. Macy's reported, which we can get to in a second, but some of the retailers have bounced. Nike, no bounce whatsoever to be found. New 2023 low on this Dick's report here. So I'm not even sure what to say at this point in time, but Nike's perilously close to going back to double digits.
Yeah, they usually run, pretty good high beta with the market and stuff. But where is the AI in the retail, Dennis? Where is the AI in retail?
Well, the clerks, there is going to be a portion of AI, but there's not the hot story. We know it's technology. The AI story is what investors are hot for, and then retail. And I mean, does this also tell us, and maybe we can ask Money Mitch here too, does this also tell us that the consumer is potentially slowing a little bit? Like maybe, just maybe they're still willing to do things, which we've talked about, but are they still willing to buy as much stuff? I mean, you get Dick's and you get some retailers not reporting great. Macy's, we could maybe couple that reporting.
That's exactly what I was going to go to. Let's take a look at another retailer to take a look into that outlook, right? Let's go to Macy's Q2 EPS, 26 cents beat the 13-cent estimate. Sales of $5.13 billion beat the $5.09 billion estimate. Their gross margin rate was at 38.1%, down from 38.9% a year over year. Q2 merchandise inventories also down 10% year over year. So that's at least maybe not the most negative thing that inventories are down, right? Yeah. That's what I felt on this report.
This report doesn't look that bad to me. The Macy's report, which is surprising. But again, you've got Dick's getting killed, and it's just not a retailer type of day. But it doesn't look that bad. And expectations weren't that high here either. I'm actually surprised that they're hitting this, and I wouldn't be surprised. And I think this happened last quarter, if I remember, or something, where the stock got hit and then turned around
And
and
then
bounced.
rallied.
Yeah, I think it could pull. And again, to Mark Twain and our good friend Ryan Dietrich, history doesn't always repeat itself, but it often rhymes. I'm feeling a little bit of rhyming in Macy's here. Maybe this is going to be the quarter where it's down early, but maybe it bounces back here, maybe after the open. Let's keep an eye on this one.
14 was just a one daily high, 2 daily highs, and then you came down that one day or probably started off the open. I like $14. I don't know if we're going to get down there. The other thing I just want to point out, someone was just pressing, selling into the report. We had 7 of 8 lower highs here, so someone was pressing into the report. We don't know if that sellers got mopped up yet, but let's see the close. If this goes green at 1473, I think you got some room in this one. Someone was pressing it ahead of the close, but Macy's down 33 cents, 1440.
Should we
Other
do
one
lows?
last night, maybe Zoom. Maybe go cover Zoom here, Mitch, because
Do we do low?
too.
Do you want to
Oh,
do
you can
low?
do
Or?
lows. Yeah, do the retail go. Sure, go
Yeah,
lows.
that's what I was trying to finish lows.
Sure.
Lows
Sure.
companies Q2 adjusted EPS $4.56 beats the $4.49 estimate. Sales of $24.96 billion misses the $24.99 billion estimate. Q2 comparable sales down at a negative 1.6%. They did affirm full year 23 outlook here, so at least that's a reaffirm. But will this be able to hold on? Home improvement stores.
Just as much as Mace. This wasn't actually that great of a report here, but they're bouncing at $6. Maybe it's because the guidance is fine. I think, at 1320, 1360, it's not really much of a raise, but it's like reaffirming to what you said. So, I don't know. The chart, the chart I don't really love here, to be honest. It kind of looks head and shouldery to me. I think I'm fading this. I'm honestly think I'm fading this pop.
Lowe's always moves around good on reports. Goes, big red to green or maybe green to red in this instance. Too bad it couldn't. I mean, for the sellers that were looking at this 226.50 area, it couldn't get there. It really they came down. So I'd use this pre-market high is a pretty good level with Lowe's. If the longer it takes to take that out at 25.67, potential downside in the issue. Potential support at the top of Monday's range, Monday's range at 2062. Full disclosure, I've owned Lowe's for I don't know a decade, maybe. Not planning on doing anything with it, but I'm starting to think about some of the,
hold. Where'd you buy that thing?
Oh man, I don't know, in the 50s, maybe 40s or 50s.
This long-term investing, you gotta know where you are. Joel likes this long-term investing, and you know what? It works for him. It didn't work on the one stock. What was that one? The Peloton. But everything else, everything else has worked pretty well on. So, that's the way long-term investing goes. You're going to get some dogs in there, but you get those winners, those ones that go 3, 4, 5 times or even 10 times your money that make up for it. So, know what you are. Joel's a pretty good long-term investor.
Set it and forget it. Lowe's off its. I'm just looking at Home Depot off its report. Well, it looks like it sold off his report. I'll be careful. I'll be careful on the longs. The longs on Lowe's trading up $5.50 here.
Zoom video. Let's take a look. Q2 adjusted EPS at $1.34 beats the $1.05 estimate. Sales of $1.14 billion beat the $1.11 billion estimate. They do see Q3 adjusted EPS at $1.07 to $1.09 versus the $1.03 estimate. Total revenues also kind of a little bit under the estimate here at $1.115 to $1.12 billion versus a $1.13 billion estimate. And then on their full year EPS outlook, the EPS is above, and then revenues are just slightly above on the high end to $4.495 billion versus a $4.48 billion estimate. They did mention, of course, AI, guys. Our mission to delivering limitless human connections remains a core as we continue to innovate and expand our platform to help bring value and enhance productivities to our customer with new AI features like Zoom IQ meeting summary and Team Chat Compose, as well as Intelligent Director. And this came from the CEO of Zoom.
We had our own Nick Brown doing the official count. He counted 60 times, they said, AI on the Zoom call. So somebody read the Coles notes. There it is, Nick Brown, 60 0. So that's a lot of times. The stock is leaking. The bottom line is this expectations were really low. The report was decent. They popped the stock, but then it's the same thing. It's like, what do you got for me though? They're talking about potential products here, but again, Zoom is the one trick pony. We need to like hear, you don't want to hear like thoughts of a product or, this, we're going to go this way. We need to hear, give us a new product. Give us a new product and the stock would breathe life again here. But until then, it's just, the Zoom, it's a kind of a cash cow right now. But again, competition's coming and we challenge whether that E doesn't start going down, which is why I don't own the stock.
Man, oh man, Dennis, did you have your eye on this thing when this went to 74.55?
Yeah.
74.55.
It wasn't that good of a report.
that algos obviously don't listen to pre-market prep or follow my technical analysis because you had 4 highs in the 74 handle in July and you traded just over 64 2 days ago. Holy mackerel. So that's not going to come into play or may not come into play. You never know. Setup here is, can you hold 68, hold yesterday's high, 67.94. You were actually, when we started talking about it, it was trading right at that area. So if you're looking left instead of right, hold the previous day's high. You got some room on the upside here, perhaps. Maybe a nice round number like 70, but holy mackerel, 74.55. What an overshoot.
But we should do Baidu. Let's do Baidu too, Mitch.
Let's go over to Baidu. Q2 adjusted EPADs here, 311 beats the 232 estimate. Sales of 4.7 billion beat the 4.57 billion estimate. And of course, they said they were well positioned to capitalize on opportunities arising from generative AI and large language models, of course. The AI Baidu? No
we
way.
Knew, and we talked about this on the closing print. I was on there with Josh, and I was like, this is one that I was actually leaning. I said, I don't really like to hold stocks through reports, but I'm like, I'm tempted to go long the stock into the report. One, because of China company, and two, Baidu's is going to pump the AI stock out there because that's what they do. So I actually did buy it at the close, bought it on the close.
Good for you.
Yeah, but no. Let me continue. Not good for me because then it started getting bid up last night and was up $1 ahead of the report. I'm like, bird in the hand. I'm up $1 ahead of the report. I'm like, I'll take it, move on. And then it's up 5. And I was like, I got to stop with the bird in the hand stuff. I'm like the first person that takes the first bite of the meat and then I leave all the good stuff for somebody else. So anyways, I was fully convicted on the closing print to go long this into the report. I actually buy it on the close. And then I'm like, it's up $1, and I'm like looking at it. Do I want to hold it to report? I sold it like 7:30 last night. It was up $1, and I'm like, shouldn't have sold it.
I couldn't identify a more bullish looking chart than Baidu here on the upper right on the daily. I mean, absolutely got it.
Are you being sarcastic? Or
I am being very sarcastic, Dennis.
Those are the ones that are working though. Stop and look at that upper right chart. Those are the stocks that are rallying on their reports because the expectations are so low. So that's actually what we have seen. Not in all cases, but Zoom looked the same. And it popped up on its report. I mean, when the expectations are lower, that bar is lower. And it was a pretty good, I had a pretty good inkling. Just, because Baidu usually beats, whether they beat or not, I don't know. But they usually beat. So anyways, I kind of thought that they might.
Interesting area where it's trading at right now, and of course you've already had a lot of price action already. But pair of highs, if we could get next target on the upside for me, if they try and push it, would be I'd go just under the pair of highs at 130 in the 132.22 area. Maybe get out there at 132, see if they lift. Yeah, is this helping Bob out at all? How's the Bobster back overnight? Did he get to 85?
And Bob, there's news here we can throw back to Money Mitch here. They officially announced the Ant IPO. So they officially announced it last night. I was long Baba overnight. I thought I would get more of a lift off of this, and I kind of was disappointed. But I did buy it on that news last night and did make myself $1.30 off of it. So it was a nice trade. Kind of thought it would have got more of a lift though, but money. I guess I just said the news here, the Ant IPO. You any other details, color on that one, Mitch?
I'm pulling some stuff here. Not much right now. I need to look a little bit more into this situation.
Yeah. So anyways, they officially announced the Ant IPO. That's all you need to know. This is obviously, something that they've had. Remember they were going to do
Yeah.
it, and then China pulled the rug, and regulators, I guess they're allowing them to do it here now. So I just think China is like, I'm biased on the dips to be buying these Chinese stocks, not in the long-term account, but in the swing trading account or in the short-term account. The simple reason is that they're beat up, and we're kind of going around and looking at some of these laggards that have potential, and these are potential AI plays, Baba and Baidu and all these. So I just think China, it's range bound, and you're getting to the bottom of the range here again, and it's worked to buy some of these stocks down here before. We talked about this yesterday.
Remember when this is what started the whole collapse in Baba, and I had it marked out. It was so long ago. I had the graphics out on my chart. When did they start picking on them about this? And then just the bet. It was like over
$300.
it was
It was right at the top.
$300.
It was right at
Yeah,
the top.
right
And
here.
then Jack
Wow.
Ma went missing, and they just never stopped selling the stock. Where in the
Yeah.
world is Jack Ma? We were playing the game.
Yeah. I
Yeah,
don't
I
know.
think he's
I mean,
okay, but it was a little bit scary there for a bit.
And we'll see if China wants to turn around the markets, because at the end of the day, everyone's been talking about how they need true fiscal stimulus. They need something that actually comes out to help these companies get off the ground. Let's go to
AI.
the banks. You want to go to the banks?
Yeah, let's talk.
All right. S&P Global downgraded credit ratings, adjusting their outlook for several U.S. banks due to concern over funding risk and decreased profitability, which could strain the sector's credit strength. Of course, S&P specifically downgraded Associated Bank Corp, Valley National Bank Corp due to vulnerability to funding risk and reliance on brokered deposits. Additionally, UMP Financial Corp, Comerica Bank, and Key Corp were also downgraded by S&P due to significant deposit outflows and prevailing higher interest rates. The rating agency also shifted outlook for S&T Bank and River City Bank from stable to negative, primarily due to sustainable exposure to commercial real estate and other related factors. Now that we've gotten all three of the rating agencies to come in and hit the banks, is this going to continue the downside, maybe turn the markets today?
I think this is not the day to be looking at banks. We got Nvidia ripping, tech is ripping, and I think this is just that could be the laggard trade of the day. And it's sleepy here right now because the market is very high, and some of your other banks are trading higher. But if we get any tells from yesterday, value. The one thing about yesterday is value did not participate yesterday. You had the diamonds, you had the Dow 30 down, you had IWM trading. If it didn't close red, it was very close to closing red. So in that huge rally that we had yesterday, which was all tech driven, you had value not participating. So now you get these credit ratings on some of these banks getting downgraded here. The charts don't look fabulous on any of these things. They've been leaking. So let's just give you the tickers. So you got ASB, VLY, UMBF, CMA, and KEY getting the S&P downgrades here today. KeyBank is down 1% in the pre-market. Comerica is down 0.8%. So that is the reason, because of those downgrades. You just wonder if it just doesn't spill over into the other banks, because you know what? You got retail the retailers with Dick's is a kind of a disaster day. You can just see it setting up again, that it's going to be one of these tech days and values looking like it may underperform. I'm actually surprised, that the IWM is as strong as it is. I'm short the IWM right now, full disclosure, because I just think, and that's, day trading, because I just think that eventually here we might see more of yesterday where tech rips and the IWM kind of gets left in the dust. Long term, I still have the long term account, but I've just got
Yeah,
right now.
let's see here. It's trading IWM here. We covered a lot there. Pair of highs at 185 and a quarter. So needs to hold that, or you got some potential downside with these banks. I mean, they're just they picked on some little ones here, except the Comerica, which, full disclosure, I did buy during the March and April meltdown, and I've been all over the place on it. I kind of want to get rid of it. This doesn't really help things here, but it's in a super extra long term account. So I don't know. It's tough. Quiet consolidation here. Major resistance just under 48, and opening into support for now. Trio of lows at 46.50. We'll see what happens with CMA.
Yeah, I think what's also interesting, at least they included some actual outlook into commercial real estate, which I think is something that is definitely an exposure out there that a lot of people are concerned about going into next year. And so that's something that I didn't hear from Moody's and I didn't hear from the other rating agencies. They're actually mentioning about the commercial real estate and how that could have substantial exposure to some related factors if those start going down. So that's an area that I'd definitely be concerned about. All right, Dennis is back. Let's keep going. Let's go to Medtronics. This is a company that I've always wanted to trade. I honestly never have owned it, but it's definitely the leader in medical devices. Q1 adjusted EPS $1.20 beat the $1.11 estimate. Sales at 7.7 billion beat the 7.57 billion estimate. Medtronic raised full year 24 adjusted EPS outlook from $5.08 and $5.16. They raised it to $5.16 from $5 and $5.10 prior versus a $5.05 estimate. So Medtronic's getting a little bit of a lift here. Can it actually get off the ground?
No. The answer is no. I'm convicted on this because this is not the day for Medtronic to report. More of a defensive name. The report was okay, not fabulous, but I think this is the kind of stock they sell today for the simple reason is that this is an Nvidia AI day, at least in the morning. If it all reverses, it could change. But I think that Medtronic, if I was long this thing, I would sell it. That's just my opinion. I have no trading position in it.
Better hold 80, 81.30. That's all I have to say.
Yeah.
81. Yeah, that's it. The support's there. Support is support. If
I
it's
think
taken
support's
out,
going today
yeah,
on
that's it.
Medtronic.
That's what I'm seeing on it.
We
Down
should
days.
talk, and plasma bringing up the TLT continues to leak here. We know it made a new 52-week low yesterday, at least new 2023 low. Oh, actually, no, I think it made a new 52-week low, close to it. Not quite to the October lows, but perilously close to the October lows. So what does this mean? Like, let's just have an overall comment because we kind of went through the earnings here. Just want to bring this to the overall conversation. What does it mean if the bonds continue to show weakness here? I mean, the equities, can they just completely ignore it? Can we have that separation? Because this has not been the case here this year. We know we were selling off in the TLT for the last 2 years. Then we had the rebound in October, and January was okay too. And stocks rebounded with that. But now you have the TLT separating from equities, where we've obviously seen the Qs and the SPY have an incredible 2023. That is not the case with the bonds and the TLT. That is continuing to go down. Will this eventually rejoin? Like, does the bond traders know something that we don't know? Or, is it maybe just a TLT a buying opportunity? But I got to think that this gap that we're creating here now eventually closes. So maybe there's a play to buy the TLT and short the stocks.
Boy, oh boy. Dennis, you said approaching a 52-week low. I mean, you're back at levels that you haven't seen since July and the summer of 2011.
You're talking like 12-year lows here on the TLT.
Yeah.
And then rates, and it's all rates. I mean, rates have come up to 20-year highs. So, the TLT is destroyed on that, obviously. But I just think like lately, what has happened lately is everybody is completely ignoring the sell-off. We have been talking about it. When we went through 100, we were nervous for stocks. And you know what? That was a tell because August was pretty rough for stocks so far. But this rebound here that we've had in the S&P, this rebound that we've had, not so much in the IWM, but in the Q has been an incredible rebound for the last few days. Are we selling this rebound? Are we believing it? I want to kind of see the TLT start to bounce before I start believing this rally, though. Or is it just all Nvidia and it all goes kaplooey on Wednesday night?
It's just new. We see new things in the market. New trends. Dennis, you've been trading many years. You see different relationships, and this is just a relationship. When the bonds were, remember when it was knocking on the door at 134. I'm like, wow, it just can't get through there. It's resistance. I think what this is trying to tell you is that the Fed may not be done. We got inflation numbers coming out right early in the month in September, and maybe they are done. But what this is saying is like, no, we're not getting the silly town with rates where they were before. We're never going back to 1.5%, 2%. No one's going to get a mortgage under 3%. This is reality. This is what that bond market is telling us. Stocks, well, money coming out of the bond market, going into stocks is one possibility. But I just think not necessarily higher for longer, but stable for longer.
Let's go to BJ's Wholesales Club. They reported their earnings here. Q2 EPS at 97 cents beats the 90-cent estimate. Sales of 4.96 billion, missed 5.15 billion estimate. BJ's Wholesale sees full year 23 EPS at $3.80 to $3.92.
Dropped after the last report, battled all the way back and filled the gap. Someone piecing out at 70. That doesn't really do you much good now. I'd say got to hold 68. There's a couple lows in that area. We've already taken it out. So if you're looking for a rally, you better get above 68 and get a sustained 68 bid. Looks pretty wide open between 66 and 68.
Let's take it back. We're going to get our guest here in a couple of minutes here, but I do think we need to talk in the context of, we've covered most of the earnings here now. We've got some other big names that are going to report. We have Snowflake and Splunk, and we've got, Alta and Workday and Marvell that are going to report. But one stock that isn't going to report that we failed to talk about so far is Tesla. And this rebound in Tesla has been nothing short of absolutely incredible as well, because in 2 days, we have went from 212 to 242. So it took literally 25 days. And I don't know what my kid's doing, but he's annoying me because he's trying to print stuff in the background here. So I apologize for the noise. So Spencer's moving out here now. He's trying to get a coloring page for we're babysitting right now for the other kid. So he's trying. Oh,
That's
very nice. Very nice. So he's a good kid. But anyways, sorry, I'm getting distracted here by the noise. Printer is loud. $299 down to $217. So that's a tidy 80-point sell-off over the course of a month. In 2 days, we're getting like 40% of that back. This is an incredible bounce here. 250, right, Joel? Like, look at 250. That's got to be the level. 500 for Nvidia, 250 for Tesla. Those are the stall out points, aren't they? Or does it just keep going?
Oh man, I just, can we roll the tape from Adam Jonas, please? When I talked about that,
Mitch has it taped, I think.
Yeah, with the downgrade there, and I was
it wasn't
just like,
a downgrade. It was so. If you know Adam Jonas, we talked about
that's
this.
right.
Joel had a great call on this. Jonas never just goes full bullish or full bearish. He hedges himself always. He's got a bull case and he's got a bear case. So on Friday, he was highlighting his bear case and saying this could get a lot uglier. And that's when Joel's like, okay, if Jonas is full on high, like getting bearish here now, this is probably the buying opportunity. And man, Joel, you could not have called that better. The stock was $210 when you were saying that in the pre-market.
Yep.
It never even hit there. It got to 212 in the regular session and has just bounced nonstop. So Jonas couldn't have been starting to turn bearish at a worst possible time on this stock. Now, give him some props because he's had his bull case and the stock has been a pretty darn good performer over the course of time. So he hasn't always been wrong. But we know when some of these analysts turn, like the Mike Wilson top, obviously, in the Morgan Stanley we've talked about, he almost top ticked it. Well, it looks like Jonas bottom ticked Tesla. So now you're getting a bounce here. But I do think, like, now if you're buying it, you're doing it backwards here. I feel like you could get to 250. I feel like that's a possibility, but I think it's going to get really tough sledding through 250.
Oh, I think I can't really think about that right now. I'd just be right now, short term, just with the way it's trading right now. Just keep an eye on a couple of your daily highs. Of course, keep an eye on that 250. But first things first, you got a high just under a pair of highs at 240.5. You're holding that for right now. Underneath that, bottom of yesterday or top of yesterday's range is real way down there, but that's a nice round number, 250, and you had 3 highs in that area going during this decline back in early August in Tesla.
835.
All right, let's go ahead. Let's get to our guests, guys. You guys smash the like. Let's keep it going. Pre-market prep.
Not to. Are you doing
David Trainer, CEO of New Constructs, our earnings maven. David, how you doing today?
I'm doing great. How are you guys?
Oh, we're doing good. We're doing good. You gave us just a great topic here to talk about today because it's earnings season, and you top of your head, you said declining importance of earnings between beats and misses, and how Wall Street just seems to move that bar for companies, and they clear the lower bar, and stocks rally. Give us the dirty details on that.
Yeah, back when I was on Wall Street, a young analyst in like 1997, I had a meeting with some of the top tech guys on the Credit Suisse team. They just come over with Frank Quattrone, and we were talking about kind of a more robust earnings model that I was advocating at the time. And they said, "Well, wait a second, we can't use that model, David." I'm like, "Well, what do you mean?" He's like, "Well, you know the trick. Like if you have a buy rating on a stock, you want it to go up, and it has a much better chance of going up if it beats the number. So for all the stocks I have a buy rating on, my numbers, published numbers, are a little lower than what I really think, and vice versa." And I said, "So what are you saying? You have two sets of numbers? Well, just put your real one in my model." Anyway, they couldn't do that. And so, look, that was in the late 90s, and that game continues to go on. And we see that happening at Wall Street, kind of behind the scenes, lowering the numbers well before earnings season, so that by the time we get to the earnings season, we're seeing a lot of beats. And a lot of those beats are artificial beats. They don't have as much meaning as they used to, Joel.
You have some examples for us here to share with us, or
I don't honestly have any off the top of my head, and I think
okay.
I probably should have, but I will tell you that we've got an earnings distortion score out now that can help people better get a better grip on the likelihood of a beat or miss just based on the noise in the numbers. And so by noise, what I mean is unusual gains and charges that Wall Street misses. And there have been numerous studies that show that not only are the published numbers not really reliable, but that Wall Street analysts do not do a good job of ferreting out
Adjusting.
the unusual gains and losses. And so nobody's doing that work. So if you have a sense of where those gains and losses are most likely going to impact numbers, you have an advantage. And we do have, earnings distortion scores for exactly that kind of thing.
So, what's your overall take on the quarter? I mean, we've been in a decline in August. That's kind of a seasonal historical pattern. We've had some beats, we've had some misses, we've had some really peculiar reactions to the stocks. I mean, considering those lower expectations overall, where are you at in evaluating Q2 earnings season?
I think more of the same through the rest of the year. The Fed is going to do whatever it can do to avoid a major crash. I think we've topped out in a lot of places. Look, this Nvidia run continues to amaze. Meme stocks continue to amaze. But the number of meme stocks, the number of crazy stocks is going down, not up. We're seeing a lot of stocks, some of the wildly overvalued stocks coming back to earth. Beyond Meat is one, Peloton one, Blue Apron. And so I think slowly and gradually, the nutty animal spirits are being sort of choked out of the market. And I believe that's the Fed's plan. I think off with everybody's head, we've only created a major correction, which would have triggered the buy the dip folks. And we would be back to where we started in terms of, just the unintelligent capital allocation, the malinvestment that's gone on for 20 years. In order to change behavior, we need sort of a long lull, an unexciting, an unsexy market. And I think that's what we're going to be seeing for the next several months and even maybe a couple of years.
I mean, is it possible to, with the bots and the algorithms and everything, continuing to overreact or underreact? Is it possible for the market? I mean, we thought maybe we were going to go into, a lull, after in Q2, but the market exploded and then gave it all back. Is it possible? I mean, just with the high speed trading, high frequency trading, it seems like they're always getting something moving and going, whether it's earnings related or not.
That's an awesome question. We have so much of our market is effectively engineered to take advantage of these short-term streaks or movements. I had buddies that were day traders. Around the time I was talking to those analysts at Credit Suisse, I had friends who were day traders telling me how their ideal transaction took place in 8 seconds, right? They buy it, they see it go up, they sell it, and they do that over and over. And that underlying idea concept has been scaled up big time by the big Wall Street firms. So you're right, Joel. I think the answer your question is, I'm not sure, but I would say that for retail investors, don't make yourself a target. Those algorithms, those bots, they don't work if you don't make the dumb trade to begin with. And if we can get smart about capital allocation at the individual level, be more discerning at the individual decision-making level, a lot of that apparatus designed to take advantage of trends and streaks and stocks will become less useful.
All right, we don't want you to give away the secret sauce here, but you see what's going on with Nvidia here, and heading into the report, just the analysts. I mean, they're not keeping the estimates low on this one. It's almost the opposite effect. Looking at your models and also measuring the expectations from earnings season. I mean, what do you say about Nvidia? I mean, words are just it's hard to describe this move since I believe it was last Friday.
It's approaching. It's hitting an all-time high here right now. I'm not joking. Like it's 480.88 was the all-time high. It's 41. It's making a new all-time high here right now. This stock is just unbelievably incredible here, David.
It is, and a few months ago we did a reverse DCF case study on Nvidia. That's a reverse discounted cash flow model, and the cool thing about that is very transparent. It just says, hey, here's what the future cash flows have to be to justify the price, just so you can get a sense of what from a fundamental perspective it means. And we showed that the margins would have to be something like 20% better than they'd ever been for the next 10 years while simultaneously growing revenue at 30% compounded annually. So that's just like a
high. You're telling me it's a high bar.
That's exactly right. And and everyone's going to say, yeah, no duh, it's expensive. And one thing that's great about what I've been doing here for the last 20 years is that when I say like stocks are just being nutty and going up and you can't trust it, at least I got meme stocks now where I can just say, hey, that's crazy. Everyone knows it's crazy. Crazy things happen. And Nvidia is like a meme stock now. I mean, this is just people piling on.
Retail's taken over. Algos have taken over.
Yeah, I mean, I think back to what Joel and I were talking about. Look, people are not going to give up on this kind of get rich quick, get rich easy strategy that trading has brought them for the last 20 years. They don't want that to go away. So they're going to jump on horses like Nvidia or meme stocks like Nvidia to keep trying to squeeze out that last bit of gain and easy money that they hope to get. And the music is sort of slowing gradually as opposed to all at one point, or different songs are stopping at different places. And all I can say is what I've said for the last 20 years, just be careful. You got a seat when the music stops.
This is good, just a good conversation here. And the music does eventually stop, but nobody knows where. And a lot of people get burned trying to call when the music stops. So what I always say is like shorting these rocket ships and stocks are making new all-time highs is a dangerous game here too, David. I mean, it's one thing to sit on the sidelines and, you miss out, but it's quite another to say, no, this is stupid. I'm going to short this thing. And now, boom, in the last 2 days, you're down 20%. You're like, what happened?
That's right. No, we've had our zombie stock list out for a little over a year, and we don't give out any specific advice, of course, but shorting in general is just, you got to be crazy. When you're dealing with meme stocks, I mean, look at, I just love these stories about Bed Bath & Beyond and Yellow Truck, right? Hey, by the way, we're going bankrupt, and then people buy the stock, right? I mean,
yeah, that's crazy too.
These are crazy times for investing, and recognize that that's what it is, and, trade accordingly or invest accordingly. It's not my cup of tea, but yeah, shorting is super dangerous, but I think the best policy is just to avoid these stocks in general.
Yeah, when they start to get just too crazy, maybe just sit on the sidelines. But again, it's the natural human, like psychological that you want to get in there. You want to be in what's going up. You see the media, and I mean, this is everywhere. Nvidia is just unbelievably pumped at us right now. CNBC, Twitter, it's nonstop. In my Twitter feed, it's like probably talked about just as much as every other stock combined. So like you look through and there's an Nvidia post, and then there's another post about another stock, and then there's an Nvidia post, and then a different stock, and then an Nvidia post. I mean, just the talk and the expectation. This is just, honestly, it's incredible how much is being talked about here right now. So I guess in that way, it's somewhat predictable that it would have had this run up ahead of the report. Do you think though there's a way that this stock could continue to move higher here after the report? Is it like all baked in? Or, what are your thoughts here? And what are your thoughts here for the overall market here too, David?
Yeah, I was going to ask
because
that
this
too.
is driving the tech market the last 2 days. There's no doubt who has taken over the bus and the tech train, and it's Nvidia here once again. Does this, what are your thoughts are going forward after the report for the overall market?
To me, this is like the Vince McMahon market or the WWE market, right? We never know who the villain or the hero is going to be. Crazy things happen. It's more about entertainment than it is real grappling or real investing. And so, Nvidia is whoever the champ is of the moment. That's Nvidia. And the Fed, is the Undertaker. They're the bad guy. That's my way of saying that this is kind of a game. We're not talking about fundamentals. And if we're not talking about fundamentals, then what are you talking about, right? What's going to choose what makes something go up, except for something somewhat arbitrary, the psychology of the masses, the mentality of the mob, some big hedge funds that like to stir up action in one corner of the market or another. That's been since the early day traders. That was kind of their thing, right? Let's stir up action. And to your point, Dennis, right? What is Twitter? What is happening on your feed? These are people out there stirring up action and interest in Nvidia. It's a concerted effort. It's part of their trading strategy to create momentum and interest in these stocks so they can continue to trade on it. And what I would just say to investors, as I've said 100 times, is like, just recognize what you're up against.
What has happened with Twitter? And I know we call it X here now, but you bring in, what I used to do, I had the tool, and I'd be like, sometimes you're like, oh, what's the news? And you can't find it in the news. And sometimes maybe somebody's talking about it on Twitter. And what I would do is type in the ticker. I would go to the latest, like not the top tab, but the latest tab. And then you would like scroll through and you'd see. But all I see in there now, David, is spam. I see just if somebody's just taking it and they're just throwing on like 20 tickers, and the same thing. Come to my chat room. Come to my chat room. Come to my chat room. I thought Musk was supposed to fix the spam issue here. And I know we're getting away from stocks. But I thought Musk was supposed to fix the spam issue. And on Twitter, which is called X now, and I'm never going to get over that, it seems worse than ever. Like the spam is completely out of control. It's went the other way, where the tool that I used to use for searching for, different news and stuff is becoming almost useless because everything in there is spam.
Dennis, we live in the misinformation age, right? I think when the history books are written and we talk about the industrial age, the technological age, the digital age, the information age, the first part of the information age is the misinformation age. We've got to figure out a way to make it through that. And Musk is a master of misinformation, right? Anyone who believes what he's saying publicly that's going to happen, you got to be kind of silly, because there's been a lot of misstatements over the years. And most of those misstatements are directly related to his own personal benefit. So whatever he's supposed to do, I would kind of watch more of his actions than necessarily the words that come out of his mouth. And Twitter is just another example of all the many platforms out there. They're designed to monetize you, not to inform you. They're designed to monetize you, not to inform you. So I tell my kids the same thing about junk food, right? Doritos are not trying to make, Frito-Lay's not trying to make you healthy. Mountain Dew's not trying to make you healthy. They're trying to make you eat another Dorito, right? Or drink another Mountain Dew. That's what they want to do. And
I thought Doritos were good for you.
The same thing with the news, right? They don't want you to get smart and be, oh, that's great, let me think about that. They want you to click on something else. So you have to kind of wake up every day with understanding what you're up against, not just in the news, in the markets, but in every way. And that's part of what I'm here for New Constructs, is to help people have some sense of the fundamentals. At least have that. And if you love momentum trading, you love technical trading, you got other skills, Elliott wave, 40-year cycles, whatever it is, add a fundamental layer to give yourself a little peace of mind.
Before we let you go, David, this market is the master of rotation, right? Moving in and out of stocks, selling bonds, and then buying Nvidia, I guess, is the new thing. But talk about what you've seen in the most recent sector rotation, and will it continue?
Yeah, I think part of this slow sort of suffocation of speculation out of the market is going to lead to a rotation into basic materials, energy, and financials. We're seeing a ton of really undervalued, overlooked stocks and energy and basic materials and financials. We have for a while. We've been putting these on our focus list for a long time. They've been excellent performers. But I think what people have lost sight of, part of over the last 20 years, right? This is a big picture idea too, is look, everyone's chasing AI, chasing NFTs or crypto, all these intangible things, get rich quick based on blockchain, right? And most people don't even know what that means. And so what we've forgotten after all this time is what it takes to build things up from the inside. whether it's our bridges and roads or electrical grid. I mean, we're making all kinds of promises about people using electric vehicles that we can't fulfill. All right. Our ESG ego is writing checks our infrastructure can't cash. Top Gun reference. You guys get that one?
Yeah.
Anyway, it's one of my favorites. And so I think we've got to think about a rebuilding of America. And I think hand in hand with that goes sort of in rebuilding our culture a little bit around being more discerning about character, right? We're not building character anymore. We got character assassination everywhere, right? That's all we got. There's no building of character. And I think I'm hopeful that we can get back to something like that, because I mean, that's, in my opinion, that's a lot of what America is about. It's not about getting rich quick. It's not about finding the next scheme so you can outdo your neighbor, right? It's about making the world a better place and making the pie bigger, contributing to a greater whole. And I think these basic materials, energy stocks, and even some of the financial stocks, that's what those are going to be supporting, as we need to build the factories that make the steel that are required to make windmills and solar panels and bridges and the electrical grid. These are things that have been long overlooked, and it's time to get back to investing in those.
Thus the name New Constructs. David Traynor. He's the CEO, giving us a great outlook on earnings season. Thanks, David. We'll dial you up again in Q3.
Thank you. Good to see you.
All right. S&Ps are leaking, and Nvidia doesn't care. S&Ps have sold off 7.5 points, and Nvidia is moving higher.
You don't think at some point the banks turn this boat around?
No. The banks haven't turned this boat around in 20 years. So if you're in the bank boat, I mean, and I get what David's saying, and there is some value in the banks, but the banks being long is just a tough trade. And go to the long-term chart, and I don't care what you look at. The XLF's a little deceiving because there's so much Berkshire in there, but and the Berk will help it. But even the XLF with all Berkshire, it's 13% Berk. And, in the last 10 years, you're down. You think about what Berkshire has done in the last 10 years, it's been a completely different story here. So, I mean, bring up the XLF in that longer term chart. I don't know if
right here. Yep. I'm going to spread it out.
Yeah, spread it out there. So, yeah, you're 20 years, you're back to where you were 2008. You've gone nowhere. I mean, it's been, if you bought at the very bottom of 2009, 2010, you did pretty good with the XLF. But again, a little deceiving because it's a lot of Berk in there, and Berk has helped it. But, bring up Citigroup, bring up, Bank America, bring up Wells Fargo. The Citigroup's destroyed. Bank America is still not even close to back to where it was in 2008. You can go, Goldman will be making new highs, I believe. I don't even know if Goldman's making new highs.
Yeah,
Goldman?
yeah.
Goldman is. Goldman is. Morgan be making new highs, I think. But they're they got the brokerage businesses. They're not like your traditional banks. Before 2008, they weren't even considered banks. So they just threw it all in there because they needed the big brokerage houses to bail out the other ones. JP Morgan's been a good one. We know that, a little bit of separation here, but the banks long term have just been tough investments. So I just I invest in zero banks because I went through financial crisis in 2008. I do invest sometimes in the Canadian banks. They're a little bit different, a little bit more conservative with the lending. We don't do 30-year mortgages, 30-year fixed, mortgages in Canada. They only usually go up 5 years and then they readjust. So, after rates are up for 2 or 3 years, those banks are getting into a better position there. So, the Canadian banks have always been done a little bit better than the US banks. But that being said, the banks have just been a terrible place to be for a very long time.
All right. I was talking just in the short term, but
I've been in the short term. I don't think today is your turnaround for the banks because in the short term, we kind of talked it off the bat. You got S&P downgrading a bunch of regionals here. You got AI day happening here. Unless Nvidia, and I think a lot of times what we have is this value versus growth going on right now. That was clear. If Nvidia collapses, the banks can turn it around. Understand those relationships that right now, the banks are actually inversely correlated with Nvidia. So Nvidia is ripping to 500. They're not interested in banks. If Nvidia starts going 470, 460 and starts collapsing, well, then they're like, okay, well, where are we moving money? Well, let's move it back into value. So it's just understanding that rotation. And, same thing when I'm saying with Medtronic. I mean, Medtronic is right now at this moment in time, this is a tech day. Now that could change. Nvidia starts to collapse, stock like Medtronic could maybe pick it up. But it all depends. That's why even if you don't trade Nvidia, keep it on your screen, because if it starts rip roaring higher, it has consequences for everything else, not even in the sector. The value trade lagged yesterday because everybody was pumping into tech because of Nvidia. So, I mean, just understanding that's my edge. That's the real edge out there. You can look at a chart, you can look at, and analyze. That's got a nice pattern and that goes. But I've told you that story before. When I first started at break trading, I started trading in like 1997. I was retail and I looked at charts and I looked at patterns. I read all these chart books. Then I got to 1999. I started full time at break trading. And I realized there was a lot to order flow and, the order book and understanding relationships and different things. And I can remember when I first started at break trading, I learned that the hard way because we had the first alert, Joel. And I set it up to have all these chart patterns. And it would literally look through 6,000 stocks and find all the head and shoulders. It would find all, the cup and handles. And I'd buy all the cup and handles and short all the head and shoulders. And the first 6 months, I made nothing. It didn't work for me. Now, maybe it works for some people, but just blindly buying every cup and handle and shorting every head and shoulders, a lot of people are trying to do that. If there was a real edge in it, it probably wouldn't be, and there is times where it works, but it doesn't work all the time. What I quickly learned was there was other edges. And the number one edge at Bright Trading in all those years and all those successful traders that we have seen, Joel, you think about how successful the Bright Trading traders were. It was all about relationships. So, understanding when this happens, this stock does this in response to it. And that's why the edge was really made. And that's how I've built, for the last 10 years we're doing this show, I've preached understanding relationships. They change, they evolve.
They do. That's the thing.
They do different
That's the
things.
thing.
And
Yep.
right now, the value versus growth is real. So even if I'm trading like the banks, I would be watching Nvidia. And if Nvidia is ripping up to 500, they're not interested in the banks. But all of a sudden, Nvidia starts to collapse. They're all of a sudden, we're interested in value again. So you got to have your value buckets. You got to have your growth buckets. You got to have all your other buckets as well. But just understanding all those different relationships, that's an edge that nobody talks about. You know why? Because it's kind of boring. It's not sexy. It's not even, it's fairly simple, but people just don't talk about it. You think about all the books on your bookshelf. How many of them preach relationships? How many do you pick up and say, oh, this is a stock relationship book? You don't see that often. There's not a lot of books out there preaching that stuff, but the stuff works. You see a lot of TA books, and some TA can work for some people, but I think the people who rely just on technical analysis, I think there's some excellent traders, but I think there's more to the markets than just technical analysis.
Okay. All right. Well, covered a lot today. S&Ps have backed off the pre-market high. Very important to take that out at 44.40. On the downside here, let's see. I think the bears might try and press it down to the top of yesterday's range. That's 44.21. But got some nice green on the screen to start today. Also, even if you're not trading Nvidia, keep that on your screen just for the overall market flow. Tomorrow we'll get a view across the pond from Michael Hewson.
All right, Dennis, you want to go ahead and wrap it up? I know you just pretty much did that, but any
Yeah,
last comments?
I finished with an educational
for 5
rant.
minutes, Mitch.
Yeah, I felt like
finished
it,
with an
but
educational rant. So you've got Macy's is ugly here. It's down to 13.50. This is retailer disaster day with Dick's, Macy's. Obviously you got Kohl's and Nordstrom rolling over here too. You have a complete separation here happening. Like I said before, I feel like the IWM could lag. Its trade is starting to pick up. I said it earlier that I had a day trade short on the IWM. That is starting to work because now IWM is up less than SPY and significantly less than Qs. And I think if Nvidia remains strong, like Joel's saying, I think IWM gets forgotten here. It's full of, a lot of different stocks, smaller stocks that may get forgotten here. So I'm still in my long-term portfolio. I have a core position in IWM, but right now, from a day trading perspective, I got short on. I think it's coming in here. Does it come in, all day? I'm just hoping it can come back down to not be up, as much as the S&P, and I'll be making money.
all right, up next, of course, you guys will have live trading with Benzinga. That's coming up next. Don't miss it. We've got more for you guys right here on Benzinga. Later today, of course, start swing trade. And who we have on next time here, Joel, on Pre-Market Prep?
Michael Hewson is going to join us from across the pond. S&P's leaking, folks. Have a good day.